Hi, everyone. Welcome to Bank of America Business Fundamentals Series 1. I am your host, Irene Cho. Today's topic covered building business credit. This webinar is brought you in partnership with the City of Los Angeles Economic and Workforce Development Center, called EWDD. BusinessSource Pico-Union Westlake region operated by PACE Business Development Center and Bank of America. This webinar will be recorded and you may find it on our website, e-library, after a week or so. Okay. Before we get started, just a little housekeeping before we get started. Please mute yourself during the webinar. We will have the last 5 to 10 minutes for Q&A session. And while our guest speakers are presenting, she may have allow you to talk through the chat box. So we are basically usually use the chat box if you have any question. Before we get started, I'd like to introduce PACE briefly. PACE was originally formed in 1975. Our PACE Business Development Center provides many counseling services for local small business owners. We also provide free webinars and training to, you know, uh, accommodate your business to take to another level. We have a various loan program as well. So please feel free to visit our website, pacebdc.org, or give us a call. Let's welcome our guest speaker, Valerie Rivas.
Hi, good afternoon, everybody. And as always, Irene and Pace, thank you so much for your continued partnership. Love working with Pace, been doing it for a few years now, so excited to be here and share my expertise. I believe I saw something come in about you couldn't find the other webinars. We'll make sure to send over the link to you. And also we'll share the flyer at the end so that way you can scan the QR code and you're able to register for our upcoming series. So looking forward to getting started today. Now, let me go ahead and introduce myself for those of you that do not know me. My name is Valerie Rivas. I'm Vice President for Business Community Engagement here in Los Angeles in Southern California. And what I do on a day-to-day basis is I do webinars like this, both in person and virtually. I provide financial literacy, education, resources to what we have with our nonprofit partners such as PACE, and then also access to capital options beyond to what we have to offer at the banks. So there's alternative financing out there. And so in the event that your bank declines you or you don't fit their guidelines, feel free to reach out to myself or Irene, and we can definitely guide you as to where you need to go to get the funding that you need, no matter what stage in your business you are. And we'll talk a little bit about that shortly. In addition to that, I sit on a few nonprofit boards. They all support entrepreneurs and business owners like yourself. I've been in the finance industry for the last 21 years, been serving entrepreneurs like yourself for the last 15, and been with Bank of America for over 10 years. In addition to that, I am part of the Hispanic Latino Business Council here internally. So we do different initiatives for the Hispanic community since I am Latina. So want to make sure that I'm catering to my Hispanic community as well. Very excited to talk about building business credit today. So just to confirm, actually, let me start sharing my screen now. Irene, if you could just please confirm that you can see my screen.
Yes.
Yes. Wonderful. Thank you so much for that. And then also, I did want to mention that if you have any questions throughout, please feel free to put them on the chat, and then I'll make sure to address them as we go, okay? And then also we'll be taking questions at the end of the session. Now, before we get started, I wanted to go through some stats. that are actually related to our workshop today. So every year we do something at the bank, at Bank of America, and we do something called the Business Owner Report. And the reason we do that is we want to see where our clients stand, where their aspiration, their goals, how they feel the direction of their company is going and their business. But more importantly, how we can serve them better and bring additional resources as needed. And we actually do listen. So if you do bank with us and you get the survey, please make sure to fill it out, because we actually, based on feedback, we make certain changes and provide different resources and make certain and implement different things so that we can go ahead and support you. Now, in the latest report for 2024, 71% of our clients were looking for access to capital options. So that's a little bit over 7 out of 10 people need access to capital options. 84 of them were concerned that inflation is currently affecting their business, which is also a different reason why you should have your business credit build, but then also be ready to access capital when needed, and if needed, to pivot. 87% were looking for the revenue to increase, and then 80% of them were looking to expand their business. That's 8 out of 10 people looking to expand. And a lot of the times you may not realize that you may need access to capital to be able to get to the next level, which is also, I would recommend for you to take our cash flow class, which will also help you tackle that down before it's needed. So make sure that you are positioned and you are proactive in your business. Now, as I mentioned, all of those different stats relate to today's workshop. So very important that you build your business credit. So what are we going to be talking about today? We're going to be talking about what is business credit and why it's important. We're going to talk about the 6 C's of credit, which is pretty much the roadmap of what lenders take a look at when looking at your business loan application. We're going to talk about key factors to small business credit, personal credit versus business credit, how you can raise your business credit score, and then also we're going to finish off with credit score best practices. Now, why is it important to have business credit at some point, whether you're already a grown and seasoned business, maybe you're well established, or maybe you're looking to grow. So every business may need some sort of access to capital options or some sort of borrowing need. Okay, especially if you're just starting off. Now, to be able to secure the most attractive rates and available terms, it's very important that you establish a strong credit score. That way, you are able to get into these loans with the traditional lenders. Traditional lenders are going to be your bank. Okay, so those are going to be your traditional lenders. They all are cash flow lenders. What does that mean? They want you to be able to show that you're able to afford that debt based on your history. So it's what you've done in the past. Now, we're going to do in the future, but what you've done in the past. Now, with this business credit rating, the potential lenders will be able to determine what your rates will be and if you're able to have enough credit worthiness for you to continue on and obtaining a loan. Okay, so today we're going to go through how we can build your business credit so we can position yourself when you are ready to get these type of loans. Now, let's go through the roadmap. Now, the first 5 C's are the ones that matter when it comes to looking at your business application, and these are crucial. So if you have this embedded in your full financial picture, then you are pretty much set up to do business with the major lenders, which are going to be your major banks, which is going to be Bank of America, US Bank, Citibank, Wells Fargo. All of those would be your traditional lenders. So they all pretty much take a look at lending the same, which is going to be your history. If you have been in business for 2 years, I always recommend that you always check with your bank first. And the reason for that is if you're able to qualify through the banks, you want to go through the banks because they're going to give you the best available terms and rates available in the industry. If you're a startup, or maybe you don't have a tax ID, or maybe you're not a citizen or don't have a residency here in the States, then maybe you are able to do alternative financing. So that's in the event that your bank is declining you, you don't fit their guidelines, we would go through an alternative route. But if you're trying to get approved through the major lenders and the traditional lenders, the first 5 C's are going to be key. So let's dive on it. Let's dive in. So number 1 is going to be capacity. So typically, we want to see that you're able to generate $1.25 of excess cash flow for every $1 of debt service. Okay. Now, why is it that we want to see an excess cash flow? Just in case of any unexpected expenses, anything that may come up. Pretty much anything that we want to be able to give you a cushion and you still be able to afford the debt that you get into. So we want to see some cushion on there. Another way that you can see this is, let's just say that you have a payment of $1,000 and that's all of your debt. Okay, all of your debt, both business and personal. We want you to be able to see that you are able to pay that back 1.25 times back. Okay, 1.25 times is what we want to be able to see, that you're able to have the capacity to repay. I wanted to mention that this formula can become lower. So instead of $1.25, it could be $1, 1.15, 1.10. If you go through different products, such as a small business administration loan, which is also known as an SBA loan. So this is just capacity going directly with the lender, but if there's other products that can lower that formula. Number 2 is capital, or I like to call it how much money you have in the bank. Now, you may be asking, oh, well, if I have money in the bank, why would I need the money? Well, you got to remember, this is how you get qualified with the traditional lenders. There's other lenders that can approve you if you don't have money in the bank. Okay, but capital is how much money in the bank. So we want to know how much of the revenue you're actually retaining in your business account. If it's not in your business account, potentially your personal account, if you're full owner, that's something else that they can consider. So just make sure that you're communicating with your business banker and your accountant so that we can get you to the goal and where you need to go. So capital, how much money you have in the bank. Typically, when a client would come into the branch or they'd inquire about getting a bank loan, I would ask what the revenue is. And I would usually calculate about 5% of the revenue to see in their business account. If they didn't have that, there would be a couple questions. 1, where is the other bank that you have? Or 2, maybe you're having some issues collecting some funds from your repayment terms, from your clients that you have payment terms with. So you may want to explore some options of different solutions that you can get money in faster so that you can pay your payables and do your cash flow cycle. Number 3 is going to be collateral, or I like to call it, what are you going to use those funds for? Very important that when you're seeking a loan, you let your banker know what you're going to be using those funds for. A couple reasons. There's different terms and rates that you're able to get as far as what collateral you're using, but then 2, you could also save yourself significant amount of money and improve your cash flow by going in the right product. Now when it comes to collateral, what are some of the collaterals that could be used? It's going to be your business assets, accounts receivable, equipment, commercial real estate, inventory. Those could all be used as collateral. Now, when it comes to collateral, as I mentioned, you want to have that communication with your banker and your accountant to put you in the right product. And the reason for that is, let's just say you come in and you say, Valerie, I need to borrow $500,000, and I don't ask you any questions. The maximum term I can give you is a 10-year. If you come in and you say, Valerie, I need an $500,000, but I'm going to buy a commercial property, instead of 10 years, I'd be able to give you a 25-year term. So you see how your payment will be amortized over 25 years versus 10 years, which means your payment would be a lot lower. So very important you communicate that with your business banker. Number 4 is conditions. So how do various market conditions, including economy, industry trends, environmental factors, affect the business prospects? So let me give you a couple of examples. So one of the examples is we went through environmental factors that messed with industry trends. So it did two different things, and also including the economy back when we had go through the pandemic. What happened during the pandemic? There was those businesses that thrived, there was those businesses that had a pivot, and there was those businesses that unfortunately are no longer in business. One, they were not able to pivot appropriately. Two, they were not ready or had enough savings for an unforeseen situation. I think the pandemic threw us all for a loop. It was something very unexpected, unforeseen, something that we had to pivot and try to move forward from, right? And so that was a market condition, that was an environmental factor that affected a lot of different industries. During that time, a lot of lenders were not open for lending because it was a risk of them getting paid back. A lot of these businesses were not operating, especially if they were not essential. So that is a condition factor that may affect you, especially if you're in an industry or dying industry. This could be a risk for you, and not only for you, but for the bank, of you not being able to pay the bank back, and it risk the you not being able, not being able to pay the bank. So that puts you at risk in a bad financial situation. So those are some things that to look at. I always bring the example of Kodak. Kodak was a film company, and where, we needed them to be able to take pictures back in the days. And without film, we were not able to develop or print these type of prints. And what happened to Kodak? They didn't stay innovative with the times. They didn't stay innovative being digital. So yes, they're still around, but not at the capacity that they were at one point. But maybe if they would have pivoted appropriately and in time and catch it on time, they could have maybe still been aboard. So those are some conditions that could affect positively or negatively on your loan application. Number 5 is character. So lenders may evaluate business related attributes like your owner's experience, your knowledge, financial competence, your personal credit history, very important, especially if you don't have business credit, because most likely you will be using your business credit like you use your personal credit, and your future business plans. They may also ask you other individuals that are tied to the success of the business. So let's just say you've been in business for 5 years and you have let's just say a manager that has been with you since day one. That says a lot about your character, stability. You're creating stability, and also a great place to work. So that shows stability. That says a lot about your character. Another example could be where character has negatively impacted a business application. We had a doctor. They were looking for a significant amount of money. Now, they actually had the 5 C's of credit, and they actually had really good communication as far as making sure that their goals were in line. But then one day he came and he wanted a significant amount of money. And he said it was going to be for working capital. He kind of told us what it was going to be used for. It didn't really make sense, and it sounded like it was way too much more than what he actually needed. But we were considering it, and we were able to get him an approval. Now, as we're doing our due diligence and we Googled the doctor, we ended up finding out that he was being sued because he was doing surgery under the influence. So he was suspended and no longer operating. So what ended up happening, unfortunately, we had to decline the loan because it said about its character. We did not want to get into risk of not being able to pay back, especially because he was not open for business. So that is something else that can negatively impact your business application. There was also an agricultural company that was stealing money from the city. And so the city was suing them rightfully to get money for all the water that they had they generated revenue and profits out of. So they wanted to get paid back. So they were being sued for the city. That also says a lot about your character and ethics of how you're running your business. So very important that you take care of your character. Number 6 is communication. And this one's very important because if you communicate with your banker and your accountant, meet with them more than once a year. A lot of people say, oh, I only meet with my accountant once a year. I would say you would meet with them at a quarterly basis, depending if you're starting off or well established. Especially if you're well established, you want to strategically plan for the future. And who's going to help you do that? It's going to be your accountant, it's going to be your business banker. Those are two major partners that you should have on your side. Why? Your accountant knows the numbers of your business. And two, your business banker knows the rate environment and the rate that where the direction of things are going. They also know promotions. So they may recommend, hey, I know you wanted to do this in Q4. Guess what? We're in Q2 and right now rates are lower. And if we continue on, it could save you, if the rates go any higher based on the amount that you're borrowing, you may save a significant amount of money if you qualify right now. So those are some of the things having a good communication with your accountant and your banker will help you. I don't see any questions on the chat. So I'm going to go ahead and move forward and assume there's no questions. Now, there's three key factors to small business credit. One is your ability to pay, two is your stability, and three is your willingness to pay. Your ability to pay, we talked about capacity. So your income is your revenue that we consider for cash flow. And typically we want to see 1.25 of excess cash flow, $1.25 of excess cash flow for every $1 of debt that you have total, okay? Now, a lot of the traditional lenders, such as banks, they may require as little as $100,000. However, most banks will require at least a revenue of $250,000. If this is not you, again, please don't feel discouraged. At the end, if we have some time, I'll go through some resources. And we also have PACE here, who is a CDFI, Community Development Financial Institutions, that if your revenue is not there, they may be able to help you. So don't get discouraged. Number two is stability. So stability is something else that we look at. So these are going to be something that we take a look at your history. So it's what you've done in the past, not what you're going to do in the future. That also matters, but we want to see what historically you have done. So typically, most lenders will require at least 2 years, 2 to 3 years, depending on what program you're going on, to be able to see how well established you are and if you're profitable to be able to take on debt. And also establishing an EIN is important for reporting purposes so that you can start building your business credit. And of course, getting a credit card that also reports to Dun & Bradstreet, which we'll talk about that in just a moment. Now, your willingness to pay is based on your past payment history for both your personal credit and with your vendors, okay? I also wanted to mention that there has been times where the client says, hey, I have a 780 score, I have an 800 score. And yes, they may have an 800 score on the personal side, but then when we go run their business, they have really low score because their vendors or suppliers have been negatively reporting them to Dun & Bradstreet. So a couple things, that recommendation, credit card, make sure that they're reporting to Dun & Bradstreet, whether you pay them or you don't pay them. So they're there for you for the good and the bad times. A lot of these lenders, they will only report negatively because it costs money to do the reporting. Two, if you have a vendor or supplier that you have credit with, very important you ask what the repayment terms are and if they are negatively reporting you to Dun & Bradstreet, because this could lower your score. I've had clients say, Valerie, I don't know what you're talking about. I go to this vendor or the supplier every day to go pick up my supplies for the day or for the week or whatever it is. They give me donuts, they give me coffee, we have great conversation. I said, yes, but this is something automatically that the system is doing for them. So just make sure that you have that communication with your vendor or supplier, whether or not they are reporting you to Dun & Bradstreet. If so, make sure that you are paying them on time, at least the minimum payment. We'll talk about that shortly as well. Paying creditor early is a great practice, and it'll also help improve your business credit score. And then Dun & Bradstreet assigns perfect payday scores, which measures a business payment history to companies that pay early. And we'll talk about best practices shortly as well. There's different types of credit scores. Okay, so there's personal credit score, which a lot of us already have, and then there's business credit score. Business credit score is scored when you have an EIN number and you're operating with a different number aside of your social security. If you are a sole proprietorship, okay, if you're a sole proprietorship, you can also, if you're a sole proprietorship, you could also get an EIN number through irs.gov. That way you keep them separate. And that it is very recommended for you to do that, as being a business owner, some of your information might become public. So how is personal credit score? Your personal credit score is a FICO score based on your personal credit history. So these are all the different relationships you have with your mortgage company, car company, personal company, for personal loans, your credit cards, anything that you're financing on the personal side, that is based on that score. Now, the higher the score, the better it is. And so those could run anywhere from 300 to 850. The higher the score, the better the score. The lower the score, the worse your score will be. How you manage your personal credit is an indicator how you'll manage your business debt. So that's kind of what I mentioned earlier about character, that if you don't have that much business credit, you have some personal credit. They'll heavily go based on your personal credit, especially if you don't have any type of business credit. Just make sure that you're taking care of that. Very highly recommend that you are monitoring your credit score. Reason for that, there might be inaccuracies out there, and this could easily boost up your credit score by just disputing that. So make sure that you're taking a look at your credit score. If you have an app that will do that on a daily basis, that would be great, because then that way you'll know if somebody's running your credit report and maybe you didn't give consent to that. You could easily freeze your credit report if needed. So these are some different things that you could protect. So it looks like Vanessa has a question. If you're a sole proprietorship, does the business credit affect your personal credit? If you're a sole proprietorship and you are using your social security number to operate your sole proprietorship, everything is going to go on your personal credit. If you're a sole proprietorship and you have an EIN number that you're operating through your sole proprietorship, then you will keep those separate. And then if you don't have an EIN number, you can go to irs.gov, or you can work with your accountant to be able to get you one. Hopefully that'll answer your question, Vanessa. Great question. How business credit is scored. So there's several credit agencies. So there's Paydex Score, Equifax Payment Index, and Experian Intellectual Score. Some lenders will use all three. Some lenders will use one, depending on which product you're going through. So just make sure that if you have any questions, you can always ask your banker. But Paydex Score goes based on a rolling 12-month period of your business payment history as reported on Dun & Bradstreet. Equifax is based on your business payment history. And then Experian Intellectual Score Plus, this is both your business and your personal credit, both mixed together. Here are some ways that you can raise your business credit score. One is you can establish trade accounts. So this would mean that you have some sort of repayment terms with your vendor or supplier. So you can work with your vendor or supplier to be able to get you some credit. Ask them if they report to Dun & Bradstreet. If they do report to Dun & Bradstreet, then that's a positive thing. But however, a lot of them will only report the positive history, the negative history, not the positive. So sometimes it only hurts you, not helps you. So just make sure you're working with your vendor and see what it is that you're getting into, whether they're going to help you in the good and the bad, or just the bad. The lenders typically want to see the 5-3-2 rule. The 532 rule is what they would ideally would like to see on your business credit report. I don't want you to dwell on this too much because there's other ways that we can mitigate this. However, ideally what lenders want to see is that you have a total of 5 trade lines. Out of those 5 trade lines, 3 of those to be business credit cards and then 2 full paid off loans. So this could be maybe you have a total of 5 different credit accounts. Maybe one is your mortgage, and then maybe 3 are business accounts, and maybe 2 of them are paid off, refinance, maybe auto loans. Those would be ideally what they want to see. However, I don't want you to dwell that on too much because there's ways that we can mitigate this as well, especially if you have good personal credit history. Encourage your vendors and suppliers to report the positive payment history to credit bureaus. So start with the larger businesses. So as I mentioned, your vendors and suppliers could potentially report to Dun & Bradstreet on the positive and the negative, not just the negative, but the positive history as well. If you pay bills early, this will actually help you. So I always recommend 2 to 3 weeks early will actually boost your credit score. Reason for that is because of the way the reporting works. If you are able to pay it before the due date, it'll actually report early and it'll boost up your credit score. So if you're able to do that and create that habit, that'll actually help you a lot. But of course, at the bare minimum, always pay it on time. 1, so you don't incur any interest. 2, I'm sorry, not any interest, so that you don't incur any late fees. And 2, you're also not messing up, negatively impacting your credit score. I always recommend my clients to use your credit card on a monthly basis and just pay it off. The reason for that is 1, you're not going to pay any late fees because you're paying the whole thing on full. 2, you're not going to pay any interest. And 3, you're buying yourself time to make that money back so you can pay your payables. So it gives you a little bit of extra time to pay your payables as well and make that money back that you are putting up front when you're swiping that card. When you swipe that credit card, it gives you a grace period of you not paying any type of interest until you get your statement in the mail. And if you get your statement in the mail or online and you pay it in full, then you're not paying any interest for that money borrowed. So you see how that could also delay your payables of you making that money back. So when you swipe that card is anywhere from 15 to 45 days, depending on when you swipe that card, that you get a grace period of no interest that you're paying. Don't max out your credit card. So make it a habit to not use more than 30% of your credit. Okay, so your credit availability, let's just say you have $10,000 limit total. You don't want to spend more than $3,000 on a monthly basis to keep your credit in check. So that's something that's very important. Again, try to pay these on a monthly basis off, so that way you don't have to pay any interest and then also have to carry any balance or get yourself into trouble with debt. Avoid judgments and liens. These could stay in your credit report up to 7 years. And not only that, but a lot of lenders will not forgive that and immediately decline you. Also, avoid judgments and liens because even though you have already settled that debt, there may be times in where they still don't take it out of your credit report. So you have to go through hoops to be able to get that. And especially if you are ready to go get a loan, that might negatively impact your business application. And then lastly, open a business checking account and business credit card, not only to have an accurate view of your business cash flow, but then also keep everything separate from your personal and your personal finances. These are some additional credit score best practices. So 1, building business credit history. So building business credit history will determine the credit worthiness and will pretty much give you a better interest rate and better terms. The better the credit, the better terms, the better rates that you are more likely to get. streamline accounting. So keep all of your different entities, at least in different business accounts. So that way you have a bird's eye of which location or which business is doing well. I had a client years ago that had 12 different businesses all in the same business account. And I said, "Oh, you have 12 businesses. Where are the business accounts?" He's like, "Oh, I have them all under one account." That is a big mistake. And the reason for that is, let's just say that you don't have the capacity to run all 12 businesses anymore. And now you can only maybe run 3. Which ones are you going to keep and which ones are you going to get rid of? I forgot how many he got rid of. I want to say he got rid of 3 or 4 locations because he ended up finding out once he separated everything that these 3 or 4 locations were actually costing him money, not making him money. So very important that you do that. Okay, so Vanessa has a question. If your business closes for good, what happens to the business debt? For example, a loan. So Vanessa, ideally, you would have to continue paying that loan back. But yes, at the end of the day, you do personally guarantee. So you're somewhat, you're still personally liable, especially if you're the business owner. So you would have to work something out with the bank. I have had seen in the past and where they actually just don't reply, don't communicate with the bank. And so then the bank will try to pursue you personally and try to recover some of the funds, that were given out as far as debt. Great question. Better record keeping. So having an LLC or corporation will also keep your finances separately. I mentioned if it's your sole proprietorship and you're using your social security number, highly recommend that you get an EIN number. And then of course, more relevant account features. So this would be whether having a checking account, savings account, debit card, credit card, but then also not use them for personal use. Other ways that could also help you is having an invoicing system or maybe taking ACH or accepting credit card, because in that way people will pay you, or business owners or your clients will pay you back faster, which means you are now able to pay your payables on time or early. All right, so now let's recap what we learned today. We talked about keeping everything separate, so having an EIN, and you can do that going through irs.gov, and also keeping your business separate from your personal. Considering opening an LLC or corporation will also help you keep things separately. If you don't, then I would recommend for you to work with your accountant or irs.gov to acquire an EIN number for your sole proprietorship, especially if you're just starting out. You got to remember when you write out a 1099, so let's just say you have a contractor and you write a 1099, if you're using your social security number on that form, your social security number will go on there instead of the EIN number of the business. So important to kind of keep your information safe that way. Open a business checking account so you have everything separate. Also, apply for a business credit card if you haven't done so already. Make sure that your lender reports to Dun & Bradstreet, but then also reports to, both the negative and the positive, not just the negative. There's a lot of credit cards out there, as I mentioned, for the business where they only report negatively, not positively. So you want a credit card that's going to help you in the good and the bad. Ask vendors to report your positive payment history, so make sure you're working with them, and also know the repayment terms, because if not, they can negatively impact your business credit score. I gave you the example of our client being declined because the personal credit history was amazing, but unfortunately, the business credit was not. When using a credit card and you're not paying it off on a monthly basis, try to keep it at 30% or less utilization. This means that if you have a $10,000 availability, times that by 30%, that's going to be $3,000. Try not to carry the balance more than your total availability. This will help you manage your credit score. And then, of course, monitor your credit score. This is going to help you in case of any inaccuracies, any fraudulent activity, so that you're able to maintain your credit score and also dispute anything that might not be on there that's supposed to be on there. Now, benefits of building business credit: qualify for financing. So how amazing would it be that you have your business credit already established? A moment comes, an opportunity, you're like, you know what? I may be getting some contracts now or some government contracts. I'm going to need some access to capital options and be ready for it. So being able to qualify for financing, being able to secure better interest rates and repayment terms, also adding to working capital. So let's just say you want to grow. We talked about earlier, 80% of our clients are looking to grow. So if you want to hire any employees, maybe you want to expand another location, adding to working capital. Also being able to easily lease or buy any vehicles that are needed for your business. And then being able to grow or acquire another business, which is another way that you can actually acquire a business. Now, I'm going to go ahead and take a look at the chat. It looks like I have a couple of questions, but in the meantime, while I address those questions, let me address these 3 QR codes. The first one is our Center for Business Empowerment. So on here, you will find different resources that are available to you for business owners, including our access to capital options and our access to capital directory, which on there you can see, let's just say that you go to Pace or you go to Bank of America or you go to your bank and you're not able to get approved. At that moment, you can go ahead and see what options are out there for you. Better money habits. So let's just say you want to get better at financial literacy. You want self-help and look at articles, buy a home, get ready to buy a home. Maybe you have a teenager that's about to move out. You want to get them ready for the world. You can find some content on there. And let's just say that today you had a little bit of a hard time coming into this class because maybe you had to take it off for lunch or whatever the case may be. You can access free learning on the 3rd QR code. There's other classes available with different time zones, so feel free to check it out. So let me go ahead and I'm going to put up my QR code in case you want to schedule an appointment with me, and my contact information. So I will do that shortly. Now let's see. We have a question here. Looks like, and I apologize if I'm mispronouncing, but Miho or Miho. When you have more than one business, is it better to have the second business separate EIN to build a new credit or establish DBA and stay in the same EIN to piggyback on the main business credit? The bank account is separate on the main business and DBA. You know what? On that one, I'm going to refer you back to your accountant. And the reason for that is because if you are in separate industries and using the same EIN number and your NICS code, let's just say, is a cleaning industry, and then let's just say, or a retail industry, and let's just say that you open up a business under the same entity, and let's just say you're now a manufacturing company, you may lose out on certain tax benefits based on your industry. So I'm going to refer you back to your accountant for the best advice on that. But those are some things to consider. Great question. Leonard, how do we ensure the vendor reports the positive transaction? What is their cost of reporting positive transactions and the cost of negative transactions? So, Leonard, I don't have the information about how much these credit bureaus charge to report to each one of them. So I don't have that information. What I do know is that it costs money. It costs more money to do both negative and positive. Either way, it still costs the money to report. But a lot of these, what these lenders do is they only want to do the negative because it's cheaper, for them. They're looking out for themselves. So I don't know exactly how much they charge, but it does cost them money. And then there was another question: how do we ensure the vendors report the positive transactions? You can talk to your vendor and just speak to them openly. Hey, do you report to Dun & Bradstreet? And if you do you report both the negative and the positive, or just the negative? And they should be able to answer that question. Great question, Leonard. Your advice from this presentation today applies to real estate investors as well. I'm not 100% sure what you mean by that. But the information today goes based on who is looking to get, build your business credit. But when it comes to lending, what I can tell you is that certain lenders have appetite for certain type of loans, and it also comes with risk associated. So it goes back to conditions, right? So if you're letting an investor borrow money, what are their market conditions currently? And is that an appetite that lender has? Hopefully that'll answer your question. If not, then I'll be happy to get you unmuted so I can address the question better. Janice, what about investing to help pay off debt and loan? Not 100% sure what you mean by that, Janice. If you want to talk about it a little bit further, I'll be happy to get you unmuted so we can talk about it. But investing to help pay off debt and loan, I'm not 100% sure what that means. It's very vague, so maybe you can elaborate. Rosario, how can I check my business credit score? So you can go to Dun & Bradstreet, or sometimes your business account, your online banking should have a credit monitoring service, so you can also check that as well. Great question. Kemper, hello, there will we get a recording? Yes, I believe it's available in a couple of days through the site. I don't know if Irene, you send it over, maybe you can address that question. See, I think it's Mijo. It says they are same business service but different target demographic. They are same business. Mijo, I don't know if you want to go ahead and unmute yourself. I'll be happy to address your question better and make sure that I give you an answer. Tina, let's see. Oh, is there a way to view your business credit score with having to pay an expensive subscription? Tina, your online banking for your bank, if you have a business account, they might be able to provide it for free as a service. But if you don't go through that, then usually, yes, you do have to pay Dun & Bradstreet. I want to say last time somebody told me they paid $100 for their full report. Or something else that you might be able to do is ask your lender that runs it if you can get a copy of it. All right.
Valerie, I just unmute.
Yeah, hi. Oh, hi.
Janice.
I just unmuted.
Hi,
Unmuted myself.
Yes.
All right. All
Tell
right. So what I wanted to mention is just the overview is not just to have a business savings account for a business, because even if you take out a loan or a line of credit, that you also invest, because to a small extent, some of your retained earnings, just a small amount, because that dividends with think of it like a bond fund or something, will help you have income and growth, but at the same time, it helps you pay off the interest that you took out for the line of credit or loan that you borrowed. So that's where my mind was kind of going. If it's good to have like a small, because a savings account alone doesn't do it, even high yield.
Oh, gotcha. Okay, so it was more of a statement, not a question.
Right. And do you agree with that to some extent? Not just save,
yes.
but to invest.
Yes, absolutely. I mean, I can't talk about investments and how to do that because I'm not licensed to do so, but yes, everybody should be investing in some capacity, whether it's for your personal need or your business. Definitely invest some of it back to your financial advisor. But yes, great statement. I thought it was a question, but yes, great call out. Thank you, Janice.
Thank you. Okay.
Yes, of course. Anybody else?
I just unmute Mijo.
Yes. Can you hear me?
Is it Mijo or Mijo?
Yes, Mijo.
Hi, Mijo.
How are you? Thank you. So my first question, for example, like I said, the main business, there are more than one businesses, and how do we build credit under one EIN or another EIN? And you said that I should talk to the accountant.
So as far as you
yeah, what I meant,
Oh no, I was just gonna say, as far as you having everything under one entity and they're different type of industries, You
Same
definitely want to
industry.
talk. Yeah, same industry.
But just because the targets are different, so I'm just wanting to separate as a branding purpose.
Yes, and you know what? I don't know how accountants decide that. So I've seen both. Okay, I've seen where people will have only one entity and they operate everything under one EIN number because it's the same industry. But then I have others where they want to maybe expand and have different locations for that, or maybe even limit their liability for that one other business, and so they keep everything separately. So
Got
it
it.
really
Okay.
just depends on you, I think, and also your accountant, what they recommend, and your tax situation. But those are some things that you may want to consider is, let's just say, yeah, you do have two businesses under one, right? And then maybe one of the businesses is getting sued. Now you're giving them access to one whole pile of everything that you have. Does that make sense? So those are some things to consider. But best bet is consult your accountant when you're in doubt.
Got it. Thank you so much.
Of course, great question. Thank you, Miho. Okay, so checking your score is costly. How can you check your score without paying so much? So Tina, I would recommend going directly to Dun & Bradstreet. That's going to be your most affordable route. As I mentioned, last time I checked, somebody paid $100, I think it was about $100 to get their score. Or your online banking through your business, maybe they sometimes also have a service and where you don't have to pay. Leticia, how do you build your business credit? Do you have to get loans? How do you know what loan is best for your business? Okay, so there's a few questions on here. How do you build your business credit? We just went through today of some of the things that you can do. So going back here, oh, this is the wrong one. Let me go back here. So we talked about some best practices of how to build your business credit. So one is starting off with having everything separate and having your own account, but also having an EIN number and getting a business credit card. Okay. When you get the business credit card, make sure that they report positive to Dun & Bradstreet, because if not, it's not going to help you at all. It's only going to hurt you. So that's step number one, business credit card. Do you have to get loans? Ideally, it helps to make your business credit stronger, especially if you're a startup. You may want to consider getting a startup loan and asking your lender if they report to Dun & Bradstreet. Just recently, I heard a lender, I said, oh, this is going to be perfect because it's going to get them ready to establish business credit and then come to us. And they said, actually, we don't report to Dun & Bradstreet. So just make sure you're asking and communicating with the lender. And then how do you know what loan is best for your business? That it all really depends on your business and for you. I always tell clients and tell them, ask themselves, if you get this loan, what is it going to do for your business? Is it going to help you? Is it going to hurt you? Are you going to be able to afford it? So is it going to even help you at all? Are you bringing in enough sales to support this request? I had a client come in and say, Valerie, I took your advice. I took a look at my business plan. I ended up realizing that every time I get a water truck, I'm actually dipping into my profits. So guess what I'm going to do? I'm going to buy a water truck. It's going to be $100,000, the loan. My payment's going to be X amount. And guess what? I calculated at the end of the year, I'm going to get an additional 150,000 into your profits. So be proactive before, and then also, as I mentioned, the cash flow class will also make you realize of when you start getting into trouble, when you're like, okay, I need to get a loan, or I'm growing too rapidly, or I'm not collecting as fast, I need a loan. These are some of the things that you need to prepare for. One more thing I'm going to bring up is when you're taking a look at your business account, have a number in mind of, hey, by this time on the 15th, I should already have $20,000. Why is it I only have 10,000? Who hasn't paid me? Those are some things that you want to take a look at. Gilberto, do you happen to have any contact for business loans for my government contracting? Yes, Gilberto, we have a lot of different contacts. So I had my QR code on earlier. I'm going to go ahead and put it back up. Feel free to reach out to me directly, email me, and then I can do an initial evaluation to see who might be able to help you. Also, you may want to, if you have not been in business for at least 2 years, I would encourage you to check with PACE to see if they could also help you with your loan. Rosario, what score is considered a good business credit score? What score does it start? So Rosario, as I mentioned, as we went through our different scores earlier, it all really depends on which one they are using. And then also what that lender considers to be a good credit score. So I won't be able to have that answer because it all really depends on what agency is being scored, and then also how they see the scoring. So for us here, a 680 is considered a good score, whereas somewhere else they may consider a decent score, maybe even 650. Natasha, what's the best credit card to start? So the best credit cards to start is going to be one that reports to both Dun & Bradstreet, both the good and the bad. As I mentioned, there are some credit cards out there that do not report to Dun & Bradstreet, and so that's going not to help you at all. I can speak for Bank of America. I know that the cards that we have here, we report both the good and the bad. Great questions. And then what credit bureau do most lenders look at for the business loan? Valanita, that actually really depends on which product. So I know here at the bank, if we're doing an auto loan, we run one type. And then if we do another type of loan, we run 2 different kinds. And sometimes it's a gamble which one we get. So it just really depends on the lender. Sorry, I can't really answer. Some of these questions are very generalized or very specific to the lender you're using. So great questions though. All right, so it looks like Irene, we don't have any more questions. I don't know if you have anything to add.
No, it's always great to have you.